Good morning this Monday, the 20th of March. I'm Grady Wolf, market analyst with Bell Direct. The global banking crisis took an historical turn this morning, with investment bank UBS agreeing to buy Credit Suisse Group in a deal worth $4.5 billion to restore investor confidence in the global banking sector. The crisis worsened on Friday after a fourth bank, the First Republic Bank, received a $30 billion lifeline from a group of big banks including Goldman Sachs and Bank of America, after customers began withdrawing their deposits from First Republic Bank amid the collapse of SVB. Shares in First Republic Bank tumbled 33% on Friday to close the week down 72%. On Friday, the Dow Jones closed 1.2% lower, the S&P 500 fell 1.1%, and the tech-heavy Nasdaq closed down 0.74%. For the week, though, the Nasdaq actually rose 4.41% as investors bet on technology and growth stocks ahead of the FOMC meeting this week in the US. Over in Europe on Friday, markets closed lower as investors digested the fallout from Credit Suisse accepting financial help to stabilise the banking system. Germany's DAX fell 1.33% on Friday, while the French CAC lost 1.43%, and in the UK, the FTSE 100 shed just over 1%. In Australia, markets closed 0.42% higher on Friday, but 2.1% lower for the week, as the local index was caught up in the global banking crisis-driven sell-off. Taking a look at commodities this morning, oil is trading 2.36% lower at $66.74 a barrel. Gold is up almost 3.6% at $1,988 an ounce, and iron ore is flat at $132 a tonne. The Australian dollar has slightly strengthened to buy 67 US cents, 88.53 Japanese yen, 54.89 British pence, and 1 New Zealand dollar and 7 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open 1.4% lower as investor sentiment continues to ride on the unfolding global banking crisis. Stocks trading ex-dividend today include Hub24, Adairs, and Duratec. If you've been thinking about these stocks, it might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded its price target on Synlait milk from $4 to $3.20, but maintain a buy rating on the company. The downgrade in price target comes after the company downwardly revised its FY23 NPAT expectations relative to market expectations ahead of its first half 23 results. NPAT guidance has been downwardly projected to now be 15 to 25 million New Zealand dollars, which is much lower than Bell Potter's expectations of a forecast for 35.8 million New Zealand dollars and consensus expectations of 50 million New Zealand dollars. Major drivers of the change in NPAT forecast from the company have been attributed to order deferrals from major IMF customers, inflationary cost pressures, lower milk production, and higher working capital costs. And Trading Central has identified a bearish signal in Ansell following the formation of a pattern over a period of 40 days, which is roughly the same amount of time the share price may fall from the close of $26.14 to the range of $20.90 to $21.80, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Monday and happy investing.